All right, what's up, everybody? Quick introduction if you guys didn't come from my TikTok. I'm Ian. I am a 18-year-old investor slash trader, and today I'm going to be doing a whole breakdown and just giving you guys a full look at my portfolio, and I'm just going to explain all my holdings, explain my average cost, explain how many shares, just give you guys the deal around my portfolio. So, as you can see, it's my portfolio right here. I actually started investing when I was 14, and I started on a custodial account that my parents made for me when I was 14. And I actually recently transferred all the assets from Charles Schwab, which was the custodial account. That's the brokerage I was using, or my parents set it up for me. So I transferred all my assets from Charles Schwab into my Robinhood account. The Robinhood account I started when I turned 18. I put like $1,500 in there, and I was just playing around with it. And I was actually really having a lot of fun, like swing trading. I had it was like a 50% month. Like I made like $750 off of like the $1,500 I put in. So I put in, transfer all the assets because they do Robinhood was offering a 3% deposit match or transfer match bonus, something like that. So yeah, I got like $400 for free just transferring all my assets into Robinhood. So as you can see, my all-time chart, my all-time is messed up, as you can probably tell, because it's only 29%. And on Charles Schwab, I'll try and put a screenshot of my Charles Schwab all-time. I believe it was about 45, 46, 47% all-time. Around the same number of gains, like $7,000 to $8,000 worth of market gains. So I'm gonna go ahead and safely say it's almost like a 50-50 split from 50% capital and 50% gains from the markets. That's pretty much how my portfolio gains has been. So all right, now I'm gonna actually get into all my holdings. So we're gonna disregard the options for right now. We're not gonna talk about that this video. All right, I'm gonna scroll all the way down. So this is all my holdings. So obviously I'll start from the bottom. So these three right here, where I own one share of, Klarna, Figure, and Gemini, don't even worry about that. That's just IPOs. I'm holding one share from those IPOs, just so I don't get any trouble with Robinhood from flipping the IPOs, because I heard holding one share is actually the method. Might be placebo, who knows? But yeah, just holding one just to be safe. Obviously I think I'm probably down right now. Yeah, I'm down $8 on Klarna. I'm not surprised. Klarna is a terrible company, but yeah. Let's go back. So we're just gonna disregard these three, the bottom three IPO shares. We don't care about that. So one share of VOO. I actually used to have I had about $4,000 into a mutual fund. I believe the ticker is SWPPX. It was actually Charles Schwab's mutual fund that tracked the S&P 500. So that was my main way of getting exposure into the S&P 500. And obviously it was not the best. Like it should have been VOO. I think VOO is genuinely the best S&P 500 ETF out there for sure. A lot of people trade SPY because SPY just has a lot more volume, but SPY's expense ratio is higher. So for long-term investing, VOO is definitely better. Trust me on it. Okay, next up we got VGT. This is Vanguard's tech growth ETF. Very solid ETF, not gonna lie. As you can see, I'm up 27% on my position. 2 shares. I believe I bought like right after the tariff mess. I bought one share like around here, and then one share like around here, or like here, something like that. Yeah, well, actually, maybe my numbers are a little off. Who knows? Yeah, so that's VGT. I believe their expense ratio, let's take a look. So yeah, 98% tech. And you can actually see their holdings right here. So 18% of it is NVIDIA, 15% of it is Microsoft, 12% of it is Apple, 4% of it is Broadcom, 2% of it is Oracle, 2% Palantir, AMD, Cisco, Salesforce, IBM. All great companies. Everyone knows all those companies. yeah, so expense ratio is pretty decent, 0.09%. Well, 0.09, but yeah, it's solid. That's on the lower end. I know QQQ, that tracks the Nasdaq, that's got like a 0.20 expense ratio, which is kind of on the higher end for your ETFs, like your growth ETFs. But like, yeah, I think anything under 0.10 is pretty solid. VOOs, I believe, is like 0.0. It might be 0.01. Oh, 0.03. Okay, 0.03. That's still solid though. And obviously here we'll take a look at VOOs. Yeah, and it's really similar. Like VOO and VGT are very similar because it's the S&P 500 versus VGT, pretty much. So yeah, we got more Nvidia, more Microsoft, more Apple, some Amazon in here. VGT does not have Amazon. We got some Meta, love Meta, 3% of Meta, that's great. More Broadcom, Google, Berkshire Hathaway, Tesla, solid holdings. So that's gonna be, those are my two favorite ETFs. And then I'll actually go to my third favorite ETF that I own. Should be right here. Yep, SCHD. This is a dividend ETF. I know there's a lot of mixed opinions on dividend ETFs, especially like, I mean, as you can see, there's not that much growth going on, but the dividends are really solid. And this is a really just a solid ETF to have, just to diversify your portfolio. Because I mean, you can look at how many sectors. Like, look at these sectors: 20% energy, 15% healthcare, 10% industrials, 10% financial services, 18% consumer defense, 10% consumer, I don't know what that is, and then 10% tech, 5% communication. I mean, this is solid, man. Like Chevron, Home Depot, Pepsi, Cisco, Verizon, Lockheed Martin. I mean, these are all really solid companies. Low expense ratio, again, 0.06, very solid. And it's, where is this dividend yield at? I believe its dividend yield is 3.82%. I don't know why it doesn't show it anywhere, or maybe I'm just blind. I guess I'm just blind, but I believe SCHD's dividend yield is 3.82%, which is solid. And let's look at the all-time chart. Yeah, so I mean, you will get growth with SCHD. Very slow growth, but I mean, 220% all-time. Let's look at the 5 years. 44% in the last 5 years. I know that's not solid, but like, if you really accumulate a lot of shares of SCHD, the compounding is literally like infinite and limitless. Like, if you have 1,000 shares of SCHD, you're bringing in like thousands of dollars a year in dividends. Like, that's like one of the easiest like passive income like methods ever. Obviously, you know, when you go into passive income, you look at real estate, but dividend ETFs is a solid one as well. I mean, really solid. You don't have to do anything. You can just invest over time. You can do like reoccurring investments into dividend ETFs, and yeah, I personally don't. I should probably start stacking up more shares of SCHD, but you know, you got to start somewhere. All right, so that is the ETF portion out of the way. Obviously, we got the IPO portion out of the way too. So let's start getting into some individual stocks, some big blue chips. We'll knock out the Mag 7 stocks that I own first. So, first Mag 7 stock on the list, we got Tesla. Hold on 1 second. Okay, yeah, I am recording. Okay, just had to make sure I'm recording. Okay, so Tesla, let's talk about Tesla. Recently, Tesla has been going crazy. In the last week, they're up 7%, $30. Last month, they're up 32% in the last month. That's solid, not gonna lie to you. And I know Elon Musk announced, I'm pretty sure it's right here or somewhere around here, yeah, Elon Musk announced that he put in $1 billion in shares. So yeah, Tesla went crazy. 3 months, up 29%. Year to date, really not up too much, because Tesla, if we look at its like 5 year and its max, I mean, this is like a pretty volatile stock, not gonna lie. Definitely the most volatile Mag 7 stock for sure. But yeah, so my average cost is $226.55. I have 6 shares. I believe I only bought it was either 2 or 3 shares, because I know Tesla has done 2 stock splits, and one of them was like a 3-to-1 and the other one was a 2-to-1, I believe, or maybe it was a 5-to-1. I can't remember. Maybe I only bought, I can't remember. I don't know exactly how many shares I bought, but right now my average cost is 226. We're up 87%. Yeah, I should have been buying more Tesla during the dips as well, because I'm very confident in Tesla. Yeah, I do like Tesla a lot. I think it's going to be huge in the future. It already is huge, but with the robo-taxi and everything like that, yeah, it should be going even crazier. Obviously, can't control what Elon Musk says and does. Elon Musk makes controversial decisions. He says controversial things. He does controversial things. But yeah, at the end of the day, Tesla is the pretty much, I mean, it is the biggest electric vehicle company, obviously. But there's so much more potential that it can get into. So yeah, this is Tesla, 1.37 trillion market cap. PE ratio is very high right now. Very high, very high, very high. Yeah, I would say right now at this price point, as of the recording of this video, Tesla's overpriced right now. Very overvalued. I would not buy, I'm not going to buy any Tesla shares until it dips to like 350 again. I wouldn't get into Tesla. Anything above 350, I would not. Because I think, I mean, you can just look at this all-time chart, man. Like, we're going to come back down eventually. So, yeah. No dividend yield is what it is. Yeah, I know a lot of people like to trade Tesla. I mean, proceed with caution, I guess. But yeah, I mean, you see Morningstar's fair value is 250. Obviously, I mean, analyst ratings don't mean the world. Like, it's not always, you know, the means to the end. Like, it doesn't matter that much. But yeah, that's Tesla. I got into Tesla probably 3 years ago. I held my position through the mud right here, as you can see. We dipped back to my like average cost. Yeah. Wait. No. What am I saying? Yeah. I bought around probably like here. As you can see, yeah, I probably bought around right around here. We dipped to, yeah, I should have been buying more shares there, but yeah. Tesla for you. Let's go to the next position. So, next up from Mag 7s, let's do Nvidia. So Nvidia is my most popular holding and my biggest holding, and how I got a lot of my gains. So yeah, let's talk about it. So average cost is 55. Yeah, I got in pretty early. Portfolio diversity is 30%. Got 38 shares. I bought 3 shares of Nvidia when it was around the 350 to 400 price range. About, let's see, it was probably, yeah, I mean, it was somewhere around this range. No. It was like around, yeah, it was like somewhere around here. I got in like 2 to 3 years ago in 2023. Yeah, I bought 3 shares. Obviously, I didn't buy them one at a time because this was still pretty early in my investing career, so I didn't have that much capital. But I bought 3 shares total, and I held them for a long time. And then obviously they did the stock split at some point. So yeah, I mean, they did hit 1,000. I'm pretty sure they hit 1,000 and they did their stock split. So yeah, I am up 216% on my position. I bought, so that this is where the 8 shares comes into play, because my 3 shares went to 30. I actually bought 8 more shares during the tariff dip, as you can see right here. I was loading up at 90, 95. I think it actually went, I don't know why Robinhood says 94, because I'm pretty sure Nvidia dipped to 90, because I was loading up on shares at 90. I saw 90 and I bought like 5 shares, I think. And then I bought like 3 more at like 95, and then I called it. I was like, okay, we're good, because I already have so much Nvidia. But yeah, guys, Nvidia is literally the driving force of AI and tech in the market. It is the biggest company, 4.34 trillion market cap for a reason. 50 PE, price to earnings ratio. That's not, I mean, it's a little overvalued, but nothing like too crazy. Very small dividend yield, but I mean, yeah. Solid fair value. It's a like 8% potential growth, I think. Don't quote me on that number. That's just a guess. Yeah. I mean, yeah, Nvidia is literally not going anywhere. Let's see what the bears say. So one thing about Nvidia that's kind of maybe not scary, but a concern recently has been China banning Nvidia chips. Um, and I'm honestly not too worried about that. I think there was research that came out that honestly, like, majority of Nvidia's revenue does not come from China at all. Like, they're they don't need China to still be crazy. Like, they have so many contracts in the U.S. Like, it's yeah. But basically, that's Nvidia for you guys. That's my holding, biggest holding in my portfolio by a lot. Yeah, love Nvidia. Next up for Mag 7 stocks, let's do Apple. So, my average cost of Apple is 189. So I got into Apple around the tariff season as well. Let's go to the 1 year. Yeah, so I was getting in around the tariff season. Tariffs, if you did not get in during the tariffs, and like, I had capital at that point because I had a job and I was doing car detailing. I also had a part-time job. Like, I had a lot of capital, and I realized that was the correction where there was so much money to be made. Like, in the Nvidia, buying Nvidia at 90, like, if you bought Nvidia at 90, you're almost up 100% already. Like, no brainer. Same thing with Apple. Obviously, Apple's not up 100% from there, but still. I loaded up on a lot of positions during the tariff crash. So yeah, I have 5 shares at an average cost of 189. We're up about 30%. Pretty solid. Don't have that many shares. Obviously, I'm exposed into Apple into my ETFs, VO and VGT. So yeah, good exposure. Decent dividend yield. A very solid price earnings ratio. This is very respectable. I think Apple is very safe. They're not going anywhere. 3.64 trillion market cap. Yeah. Fair value of 210. We don't care. I know the iPhone 17 looks a little questionable and controversial, but I promise you guys, Apple's not going anywhere. Apple has such like a grip, like, it has like the youth's, not even just the youth, just like everyone's opinion on like phones and like tech products. Like, everyone has AirPods, everyone has Apple iPhones, everyone uses MacBooks, like, everyone loves Mac, like, everyone just loves Apple products. Like, Apple just has a grasp on the tech product world. Like, straight up, everyone has iPhones, everyone has AirPods, everyone has Apple Watches, everyone's got AirPods, I'm recording this on an iPhone. Like, it's Apple, guys. So yeah. Only 5% of my portfolio, only 5 shares. Realistically, counting the exposure in the ETFs, probably closer to like 7% maybe. But yeah, that's Apple for you guys. I believe I have one more Mag 7 stock to talk about in my portfolio, which is Amazon. So let's talk about Amazon. All right, here's Amazon, as you guys can see. 7% of my portfolio. We got 7 shares. We're up 20% currently. Average cost of 192. I was buying Amazon. I actually did not own any Amazon before the tariffs. I bought all my Amazon shares from basically here, and then I saw Amazon was climbing, so I kept buying more. I believe I bought more Amazon around here as well. Yeah, I love Amazon. I don't think Amazon's going anywhere. They also have, just like Apple, they have a grasp on the e-commerce and retail industry. Like, literally everyone and their mother uses Amazon. Who do you know that doesn't use Amazon? Like, I'm not gonna say it's a monopoly, but come on. Everyone uses Amazon. Amazon's not going anywhere. We all know that. So let's take a look into the technicals. 35 PE, very solid, not too overvalued. I think the general rule of thumb is like 30 PE, and it's getting overvalued, but 35 is completely fine. 2.47 trillion market cap, no dividend yield. Let's see what the fair value is. 245. That's like a 5% growth, maybe a little less. Yeah, but always crushing their earnings, always above estimated EPS. Yeah, Amazon's solid. Let's see what the bears say. Amazon may not be successful in penetrating new retail categories such as luxury goods and improved e-commerce experience from large retailers. Whatever. I don't even Amazon. This is Amazon, guys. Yeah. All right. That is the Mag 7 stocks out of the way. We're still on individual stocks. So I'm going to start getting into, I'm going to save the penny stocks for last. I'm going to start getting into the still large cap stocks, but just not as known as the Mag 7 stocks. So we're going to start out with, let's do Palo Alto Networks. Palo Alto Networks is, I believe Palo Alto Networks is the 4th biggest position in my portfolio, maybe 5th, I don't know. Yeah. Okay, so as you can see, I'm up 42% on my position in Palo Alto Networks. My average cost is 146. Let's see when I bought. I believe I bought right after this big dip. I believe this right here is where they had a cyber attack. So I bought about right here, and then I bought 5 shares there, and then I bought 2 shares here. Yeah, right here. I bought 2 shares. No. I bought 2 shares here, not the tariffs. I didn't buy any Palo Alto Networks during the tariffs, but I bought them here after they bought out another company, which is normally a good sign, but they spent a lot of money. It was a very expensive buyout. So yeah, there's a big dip on Palo Alto Networks. Obviously, I bought the dip. Palo Alto Networks is like one of the biggest cybersecurity companies in the world. I don't think they're going anywhere. Obviously, guys, you know I like tech, and they have plenty of government contracts. They also work with Israel. So, yeah, P is out the wazoo right now. 130 price earnings ratio, 139 billion market cap. I really like Palo Alto Networks, guys. This for me is, I'm gonna be holding this for a long time. Not gonna lie, gonna hold this one for a long time. So yeah, that's pretty much it. It's about 6.5% of my portfolio, 7 shares. Yeah, pretty solid. Next up, we're gonna do. What should we do? I'm gonna do BM&R. So this is a little like contradicting stock in my portfolio, because I don't know if you guys know or not, but I do not normally touch crypto. I don't do crypto, but BM&R is an Ethereum treasury, and if I was, so technically I am touching crypto by investing into BM&R, but if I was to actually invest in a crypto, there's only 3 I would invest in: Bitcoin, Ethereum, and Solana. BM&R is an Ethereum treasury. I believe they're one of the biggest Ethereum treasuries. They might be the biggest, not gonna lie. Blockchain. They mine crypto, specifically Ethereum. And honestly, I'm very out. So this was a weird play for me. So I got in. As you can see, my average cost is $49.78. I actually got in. Let's look at the year to date. So actually, no, let's look at the 3 months. So I got in right here. It was very expensive what I got in, or maybe it was here. It was on the dip, like right here. Yeah, I started my position around here, and as you can see, BM&R it fell, and I dollar cost average all the way from when I got in at like 58 all the way down to 40. Why is that? Yeah, like 42. I dollar cost average down all the way to 42. Recently, BM&R has been picking back up because Ethereum has been picking back up. This was a nice little Ethereum run right here. And then Ethereum, all the cryptos right now are running right now. Bitcoin's up, Ethereum's up. They're not quite at all-time highs, but, Yeah, I like BM&R a lot. I think I'm probably going to sell BM&R hopefully by the end of the year. Like, I want to sell BM&R. Obviously, you can't time the end of a crypto bull run, but I want to sell BM&R around $80. Hopefully that'll be before like November. because I know like December is when Bitcoin starts to shake up. Yeah. We'll see though. But yeah, I like BMNR a lot. I really do. 10 billion market cap, no dividend yield. Let's see what. Oh yeah, as you can see, here's the. I actually sold a couple. I did sell a couple shares. I took some profit. Here, I'll show you guys the average cost, dollar cost averaging. Yeah, I started at 59 dollar cost average all the way down. Yeah, that's what you want to do. If you are an investor, you want to dollar cost average down on stocks that you are confident in. That's BMNR for you. So, okay, I forgot. UNH, United Healthcare. This is like one of my biggest positions, I believe. So almost 9% of my portfolio is United Healthcare. I'm up 18% currently, $300. I actually did sell, I had 3 more shares of United Health that I sold that I actually bought at like $237, and I just sold them because I needed some buying power for a couple plays. Probably should have held them, but it is what it is. So obviously, I think everyone knows about United Healthcare by now. That's a pretty low PE right now, but yeah, 304 billion market cap, solid dividend yield. Not gonna lie. They are the biggest Medicaid healthcare company I believe in the world, at least in the U.S. for sure. The U.S. And it's one of those companies that's just too big to fail. So here, I'm gonna take a look at the 1-year chart, and you guys, or just year to date. So yeah, it's a pretty ugly year to date, and I'll explain it if you guys aren't familiar yet. So this right here, I believe, I don't exactly know when here, we're gonna look up when did, oh my god, I can't type. So the United Health CEO actually was murdered. He was killed December 4th, 2024. Rough. So let's go to, can't find it, whatever. You have to go to the 1 year. Okay, yeah. So December 4th. This is around when it started slipping. United Health started slipping after Brian Thompson, CEO, dies. Started slipping even more, and then we get this. I don't really know what this big jump came from, but right here we can see this is when a lot of fraudulent accusations come flying at United Healthcare, and the Department of Justice announces that they are investigating United Health. And that was pretty much a downward spiral for United Health, I believe. Yeah, their CEO stepped down. There's a lot of stuff was going on. From like April to May, United Health dropped like 50% pretty much. You can see it. I mean, almost 50%, like 48%. So I originally got into United Health around this area, about 300 I was buying. As you can see, my average cost is 285. I was buying at like 300. And then I waited, I bought even more down here in July, and then I really loaded up on this dip. So I bought, don't exactly know what this dip came from, but I loaded more up at 237, and I bought more at 250. And obviously right now we're sitting at 337, pretty solid. I'm not going to lie to you, I think United Health has no issues getting back up to 500. Might take a couple years, but this is going to be a long-term hold for me. I like United Health. And obviously, guys, with investing, I know a lot of people would consider United Healthcare to be a immoral investment. And I know United Health is definitely doing some shady stuff, for sure. I mean, it's healthcare. They're definitely doing some crazy stuff. Definitely screwing a lot of people over. I mean, you don't get this high of an earnings per share by, saving the manatees. Like, that's just not how it works. Like, we're at a $7 earnings per share. Like, that's ridiculous. So yeah, you don't get that by saving the manatees, and you don't make money in the stock market by saving the manatees, guys. Like, if you're investing, you're in the business of investing to make money. And I know United Health is definitely not the most moral company to put your money in, but I mean, gains speak for themselves. I'm going to hold this one for a while. Yeah, and I can sleep at night owning United Health. I know, yeah. I'll try not to get too far into that, but yeah. United Health. That's like my third or fourth biggest position, I believe. So I think that is all of the big stocks out of the way. Pretty sure. Yeah, I think that's all the big ones. Pretty much. So let's get into the smaller, pennies and whatnot. So, Archer. Let's talk about Archer first. This is like the penny stocks / small cap, mid cap stocks, whatever you want to call them. So, I'm not really up too much on Archer. I actually loaded up on Archer at a pretty bad time. I started loading up on Archer here at about 10. Should have sold at 13. Don't know what I was thinking. And I've just been holding it out. I bought more shares like right here in like the $8 range. This is a really small position, guys. $200 is very small. Very small. But I do think Archer in the future will be huge right now. I mean, if we just look at Archer, yeah, so they're not profitable yet. As you can see, they're not profitable yet. But Archer's planes, like here, let's just look at, I'm going to show you guys what Archer Aviation builds. Why did that not delete? Okay, Archer Aviation. Let's look at the planes they make, okay? This is what Archer is making. Yeah, holy hell. Urban, I mean like, bro, look. Okay. I'm just gonna keep it as that. I like Archer Aviation a lot. Probably add more shares. Same thing with Joby Aviation. I think they're really similar. Yeah. Just a small position for me, but yeah. That's Archer Aviation for you. So, not going to talk too much about it. Why am I back to United Health? Okay, all right, let's talk about Rich Tech Robotics next, because Rich Tech Robotics is all the hype, and I was actually in on this stock very early. Now my average cost is very high, 414. So Rich Tech Robotics has been on a tear. They're up 26% this week. They're up 129% on the month, and they're up 135% in 3 months. And year to date, actually, yeah, they're only up like 56%. But here, let's look at the all-time. Yeah, so they IPO'd at about $5, got up to $8, really sat around $1, and then this right here is when they announced a contract with NVIDIA, I believe. Like NVIDIA, Jensen Huang complimented the Rich Tech Robotics CEO, and apparently they have some deal going on. So yeah, that's kind of where this big thing came from. This, I don't know what you would call this. I mean, it's just like it's a move up. It's a very big move up. It's like that's like 150% move up. And we got this just consolidation around the $2, and I'm going to show you guys when I actually got in. We're going to look at all my transactions for Rich Tech. Okay, no, that's not, bro, what? No, I wanted to look at mine. I don't care what hedge funds are doing, bro. Okay, history. All right, here we go. This is when I started my Robinhood account earlier, when I told you guys I was just getting in just for fun, just swing trading. Bought 14 shares at $1.84. So let's say I bought 100 shares. Yeah, okay. Bought more at, I don't even know what was I doing? What was I doing, bro? Okay, I bought more at 183. So I had like, yeah, stock lending. Okay. Bought more at 206. Bought more at 218. Bought more at 214. Sold at 250. bought more for fun. Now I'm just staring at them going crazy, so I FOMO'd in. Yeah. I think Rich Tech Robotics is going to get up to like $20 in like 5 years, maybe 10 years. We'll see. Yeah, I don't know. I think Rich Tech Robotics is going to be huge in the future. And right now there's a lot of just meme around it, but yeah, Rich Tech Robotics for you. Now I think we're almost done. Okay, yeah. 3 left, I believe. Let's talk about QBTS. QBTS is a quantum computing stock. Same deal with QBTS, guys. I did not buy enough. I'm up 60% on my position. Average cost is 16. Got in. Yeah, I got in like around here. Actually, it might have been here too. Yeah, it might have been here. Quantum computing stocks, like all of them, have been on a tear in the last like week. And you can see they're up 50%. At least QBTS is. I know Rigetti Computing is up a lot. Let's look at Rigetti. Yeah, Rigetti. Oh my god. Rigetti's up, yeah, 46%. Yeah. All the quantum computing, 100% in the last month. Like, quantum computing stocks have been going crazy recently. Yeah, and my favorite is D-Wave Quantum. Don't ask me why. It's just my favorite. 100% buy rating, you know. But obviously, most quantum computing stocks, at least, I don't know about all of them, but right now, most of them are just burning cash. But obviously, with AI, you need quantum computing. Like, you need the quantum computing to write, you know. Duh. So I think in the future, quantum computing stocks will be even bigger than they are right now. Right now, though, I think these are a little too high up to buy in. I wouldn't get in any of them right now. It's just a little too high, and I know they're gonna come back down eventually. So we're just gonna let quantum computing stocks be for now. But yeah, it's QBTS, very small position for me. 1% of my portfolio. Yeah, should have bought more shares, but I'm a dingus, so I didn't. Now, 2 left, I believe. Let's talk about USAR. This thing has been going nowhere. I believe I'm up 3%. So the idea on this play, I got in, it's been a while since I got in. I think I got in like somewhere around here, maybe earlier. Might have been like here, low-key. Yeah, it might have been like here, if I remember correctly. I think it was like right here. So USAR is a rare earth metals company in the US, and the idea behind this was that, obviously, I believe it was in like April or May, China announced that they would no longer export rare earth materials and metals to the US. And I chose the wrong materials company, because let's look at the other one that I could have chose. Alright, so yeah, MP Materials, could have gotten into MP. Actually, same, I wouldn't even be up that much, but yeah, MP Materials went crazy. Yeah. Yeah. It is what it is. But yeah, USAR, I'm probably just going to hold it for a while. It's a really small position for me anyways. I'll probably just hold it. Yeah. Why not? Small position. I'm not that convicted in it, but who knows? And then my other penny stock that I own is Honest Company. Now, the Honest Company is, yeah, we're looking kind of poopy, not gonna lie. But I actually do believe in the Honest Company. I believe it can actually hit about $6 at least. I think it can hit $6. I believe 350 right here. Hit 350 sometime. Yeah, I think 350 was like low-key the bottom, like right here. Probably, yeah, like this range, the 350 range is low-key the bottom for Honest, in my opinion. And I think we can hit $6. I'm down on my position right now. It's literally $150 though. This is just a low conviction penny stock play. Nothing much to it, but yeah. And also Jessica Alba is the CEO of Honest Company, so I'd love to, you know, I don't hate that I'm supporting Jessica Alba. That's all I'm saying. Yeah, they are actually profitable. Nice, but yeah, nothing much to say here. Very small conviction, penny stock play. Nothing much to say. But yeah, that is pretty much a breakdown on all of my positions. Yeah, is the watch list. I can probably break down. I'll probably make another video breaking down things on my watch list. But yeah, today I know this video is probably gonna suck. I'm actually recording the face cam on my phone because my face cam is broken. Thought it was working, can't use it, and I'm actually making the recording on my PC where I'm screen recording it. So hopefully I can mash it up together and it looks nice. But yeah, this is my first YouTube video, so bear with me. It's probably going to be pretty bad. But I hope you guys enjoyed the information in this video. Try to break down all the stocks, all my positions in my portfolio as well as I could. I know a lot of you guys were interested because I get questions about it all the time, and I've been telling you guys I was going to make a YouTube video on it, and I've been procrastinating about it, and I finally got it. Hopefully I'll get it out as soon as I can. Yeah, so these are all my positions. Nothing too crazy about it, but yeah, pretty. I like my portfolio a lot. I know it's very tech heavy. I think it's like 80%, 80% tech. But what can I say? Yeah. Anyways, thanks for watching, guys. Leave a like on the video. Subscribe if you're new. Hopefully all you guys from TikTok are already subscribed. But yeah, thank you guys for watching. I appreciate it. Leave a comment if you're interested on any of my positions. If you got any video ideas for me, any stocks you want me to do a breakdown on, deep dive, anything like that, just let me know. But yeah, thank you guys for watching, and I'll see you in the next one.